Imagine waking up tomorrow and discovering that your money is still there. Same bank balance, same apps, same numbers. But shops hesitate. Banks slow down. Markets freeze. Not because money disappeared, but because something quieter cracked. Belief. Modern finance doesn't run on cash or code. It runs on trust. And trust, when it turns into an asset, becomes dangerous. This matters right now because we are living in an economy built almost entirely on promises. Promises layered on top of promises. Promises priced, traded, leveraged, and sold as if they were solid. They are not. They are belief. Let me show you how this works. Without spreadsheets, without jargon, without pretending this is abstract, because it isn't. Start simple. Money itself has no value. A paper note costs almost nothing to make. A digital number costs even less. What gives it power is agreement. A shared belief that tomorrow, someone else will accept it. That belief is so strong, we rarely question it. Until we have to. Banks are not vaults full of your cash. They are confidence machines. When you deposit money, the bank doesn't store it. It lends most of it out. Again. And again. This isn't a secret. It's the system. For every dollar you see in your account, several other dollars exist only as promises elsewhere. Loans, mortgages, credit lines. If everyone asked for their money at once, the system would fail instantly. But it doesn't, because we believe everyone else won't ask. That's the first layer of trust. Then we stack more belief on top. Companies don't trade on what they earn today. They trade on what investors believe they might earn someday. Stocks are not priced on reality. They're priced on expectations. That's why a company can lose money for years and still be worth billions. Not because it is valuable, but because people believe it will be. Now multiply that belief. Funds buy stocks not because they love the business, but because they believe other funds will buy later. Algorithms trade based on what they believe humans will do. Humans follow charts based on what they believe algorithms are seeing. It's belief watching belief at scale. Quietly. This is where things get uncomfortable because belief is not evenly distributed. It concentrates. The people closest to the system, the executives, the insiders, the early movers, they don't just benefit from belief. They shape it. They sell confidence. They manage narratives. They time exits. When belief is high, they cash out. When it collapses, the system calls it unforeseen. Let's talk numbers for a moment. Global debt is now over $300 trillion. That's governments, corporations, households, 300 trillion. No one plans to pay this back in the traditional sense. It can't be. The system assumes growth will continue forever. That future productivity will cover today's promises. That assumption is not guaranteed. It's believed. And belief is priced daily. Look at bonds. They are literally promises traded as products. You lend money to a government for 10, 20, 30 years. In return, you get interest. But the real product isn't the interest. It's trust that the government will exist, function, and choose to repay you decades from now. When trust is high, borrowing is cheap. When trust wobbles, rates explode. Nothing physical changes. No factories vanish. No roads collapse. Just belief. In 2008, this belief cracked. Banks trusted banks until they didn't. Mortgage-backed securities were built on the belief that housing prices always rise. Ratings agencies stamped that belief with authority. Investors bought it. Pension funds relied on it. Then reality showed up. Homes stopped rising. Loans failed. And suddenly, no one trusted the numbers. The system didn't break slowly. It froze. Credit stopped. Markets locked. Governments stepped in, not to save greed, but to save belief. Because without belief, The entire structure collapses. That bailout wasn't about banks. It was about restoring confidence before panic spread. Here's the irony. We learned the lesson and then doubled down. Today, markets are faster, more leveraged, more narrative-driven. Assets are valued not on cash flows, but on vibes, on stories, on future potential stretched so far it becomes almost mythological. Quiet humor moment. We now live in a world where jokes on internet forums can move billions of dollars in market value. That's not democratization. That's volatility fueled by belief with no anchor. Even safe assets aren't safe because they're stable. They're safe because we agree to treat them that way. Gold has value because we collectively pretend it does. The dollar dominates because everyone believes everyone else will keep using it. Currencies don't collapse when they run out of money. They collapse when people stop believing the promises behind them. Now zoom out. Technology didn't eliminate belief. It accelerated it. Social media compresses narratives into hours instead of years. Fear spreads faster than fundamentals. Confidence evaporates faster than balance sheets change. Markets don't wait for facts anymore. They front-run expectations of reactions to reactions. That's not irrational. It's human behavior at machine speed. The danger isn't that belief exists. The danger is that belief is treated like a hard asset, something reliable, something countable, something permanent. It isn't. Belief is reflexive. It feeds on itself. When things go up, belief strengthens. When they stall, belief questions. When they fall, belief panics. And once panic starts, math doesn't matter. Liquidity vanishes, prices gap. And suddenly everyone realizes the same thing at once. There is no floor, only agreement. So why does this matter to you? Because your job, your savings, your pension, your currency, all of it is downstream from belief-driven systems. You don't need a crash to feel it. Just a shift, a slower economy, tighter credit, less trust. When belief tightens, opportunities disappear first, then jobs, then stability. This isn't a warning, it's a description. Belief is powerful. It builds civilizations. But when it's financialized, when it's packaged, sold, and leveraged, it becomes fragile. The system doesn't fail because people are stupid. It fails because belief works until it doesn't. And here's the final uncomfortable question. If markets are priced on belief, if money is a promise, if debt assumes a future we can't verify, what happens when enough people stop believing at the same time? Not out of fear, but out of exhaustion. That question doesn't have an answer yet, and that might be the most honest thing about the system.